these were the rules. Make a trading plan, which is the first thing that we must do. We must have a trading plan. Well, this is the trading plan. Next, you must follow your plan. Nevertheless, it's a trading plan. We take 2 trades per day, 3 trades at most. Remember, I'll have 4 trading sessions. I will have the Sydney, Tokyo, London, and New York. But we'll take trade number 1 must be the London. Then we'll have 2 trades at most during the New York. We'll have what we call New York 1 and New York 2. So the London, New York 1, New York 2. When I say New York 1, I mean the first trade of the New York session that you, during the New York session, take New York 2 is the second trade during the New York session that you take. Now, every London must be GBPJPY. Every London session, which is 8 o'clock, we must trade only GBPJPY. Every New York must be US 100. We are not trading any other pair, so our trading plan consists of just 2 pairs and at most 3 trades in a day. You understand? So let's scroll down and see what else we got. Okay, the next, risk management. What is our risk parameters? What's our risk plan? Okay, risk 2% for London. You see, every London trade we're risking 2% of our equity. So if you had a $100,000 equity, you're risking $2,000 in that trade. 1:1 risk to reward ratio takes you up by extra $2,000 profit. Remember, FTMO challenge is just for you to make 10%, which may be easy. So risking 2% for the London is great. Now, risk 1% for New York 1. Risk 2% for New York 2 if New York 1 was profitable.
It makes sense.
You understand? But if New York 1 is not profitable, during New York 2, you can risk 1%. And I also think if GBPJPY was a loss, risk the same 1% on New York 1 and 1% on New York 2. Don't risk 2% on New York 2. You understand? So we know very well that if, for example, we came during GBPJPY as a profit trade and had just a 1:1 would have grown already by 2%. If we go for New York 1 and we take a trade, right, and that New York 1 does not work well, we will still have positive 1% for the day. And if New York were to trade New York 2, we can no longer risk 2%, we can only risk 1%. And if New York 2 is a bad trade, we will lose 1% and therefore having a break-even day. You understand?
So basically, the risk to reward ratio is 1:1. That's the assumption.
The minimum possible risk to reward ratio of 1. I'm just saying if your risk to reward ratio is 1:1, and you lose 2 trades out of 3, you'll be able to, make this. Now, if imagine days that are all green, imagine these are just 1:1 trades, okay? You reach 2%, you get back 2%. Reach 1%, get back 1%. Reach 2%, get back 2%. This is a total of 5% increase in one day. You understand? Which is quite great, right? For an FTMO account, you have up to 10 days to make 10%. You come in one day, if you have a green day, you're sure of making 5%. But let's not talk with mouth. Let us back test and for tested for some time. Let us back test and see whether it's making sense. So risks the same on New York 1% on New York 1 and New York 2. If New York 3, if London was a loss. So if London was a loss, we lost 2%. If in case we risk New York 1% and we lost it, right? It means we're down by 3%. And if we lose New York 1, we may not trade New York 2. You understand? That's because our maximum risk tolerance a day is negative 3%. Well, it will go up to negative 4%, depending on you. But I think negative 4% is just ideal, that if you still take New York 2 and you lose it, you have that negative 4% of your account in an entire losing day, losing all your trades in a row. Well, which is weird. It rarely happens, but it's possible. So our max loss that we can see after hitting all our stop losses in one day is negative 4%. And if the next day you just come and take one trade, London, and it's good at a 1:1, you'll be up by positive 2% again. By the time you take at the next London, you are up by a positive 4% in 2 days, and you keep trading normally. You understand?
Yes.
So you see that everything being equal, if we have losing streaks, we will never really hit a max daily drawdown with a FTMO account. Now, risk 1% on every negative 5% account. That is if your account, there is negative 5% account balance. That is if your account goes like
Let's say
negative.
the previous day you had losses throughout.
Yeah.
So the next day you use 1%.
As long as it's below negative, it's around negative 5%.
Mm.
London, you risk 1%. You understand?
Mm.
That's to trade New York, you're risking only 1%. New York 3, you're risking only 1%. You understand?
Mm.
Now, and 0.5% on every negative 3% account balance. So if you still lose an account, let me say you had a $10,000 account and it went down to 9,000, below 9,500, 9,300, you start risking 0.5% a trade. That's like $50 a trade. Yeah. And should be one position, or your total sum of risk should be $50. You understand? We'll look at how to manage your risks as well. How to make this exact values.
You risk less on this thing on when you have reached minus 5%.
As our Samsung is disconnected.
Surely, sure.
Yeah.
Okay, why is adjusting the Samsung doesn't measure something? The risks, the amount of risks you're taking is not based on the prices. It's based rather on the lot size you're going to take. So when you look on your charts, you see your charts are going to tell you where to take your stop loss, for instance. Now, based on that location, you calculate how many pips is this, and you see that the overall risk, probably the 1% in the 10K account is $100. You cannot lose more than $100. So if the charts tell you that your stop loss is supposed to be 30 pips, for instance, then you know that you need to utilize a lot size that is going to get you a maximum of $100 with 30 pips, a negative 30 pips more.
You have to show that. Yes.
I don't understand what he's saying.
Yeah, I'm getting what he's saying.
Oh, because some people will tempt and say, mix this, they will shift your stop loss and make it infeasible, and then it hits it ASAP.
So there's something that was not really let me just stop.
Yeah.
You said risk 0.5% on a negative 3% account.
Like from negative, if you go lose extra negative 3% from that negative 5%.
Okay, from that. Okay.
A total of negative 8%.
Negative 8%.
If
we reach up to 8%, you start risking 0.5 position. Or less even. You understand?
Yes.
Well, we can stick to it, but this should be the worst case scenario. Like you can make this negative 2%, No. Yeah. -7 total to start risking 0.5.
Yeah, I get the logic now.
You get it right?
Yeah.
Okay, so this is the risk management part of it, which we may perfect it. Now let's go now to the trade management. Take all profits at TP1 on GBPJPY. TP1 is based on structure. Don't try to hold GBPJPY above TP1 because you are trading a particular setup of GBPJPY. Move to break even at smaller structure. You understand? Take 1:1 to 1:2 TP levels at TP1. So your TP1 should be a minimum of 1:1. But if you see a TP1 of your trader is 1:2, don't be afraid to take. You understand?
Yeah.
Take a minimum of 1:2 on US 100 during the New York 1 and New York 2. So you are trading US 100. Your minimum risk to reward ratio is 1:2. So anytime I take the trade, right, risk 1%, put the stop loss 1:2. You understand?
Yes.
Okay. What does this mean? It means if we get a 1:1, for example, come to GBPJPY, if we reach 2%, we will get a 1:1. We're growing is immediately by 2% increase, right?
Yeah.
Then if we come now to London, New York 1, and we risk 1% for New York 1, right?
Yes.
Since we have 2% now extra, we can reach 1% in that 2% profit we should make on New York 1. New York 1 takes it, we can step out, or you ready to risk for New York 2. But if New York 1 gives you profit, it gives you 1:2 minimum risk to reward ratio. So that 1% you get another 2% increase, which takes you, if you have made $200 or $2,000, like $100,000 account, you're already up at $4,000. Now, if New York 1 is profitable, we will come to New York 2, and this time we'll reach 2% on New York 2. And if New York 2 does not go well, we'll go back home with 2% increase. And if New York 2 works very well and the risk to reward ratio is 1:2, let's see, you risk 2%, that's like another $2,000, right? Risk to reward ratio of 1:2, you're going by $4,000. On the $4,000 which you had, you are $8,000 in a single day, 8% increase. So this is possible to grow you up by 8%, just like that. If your trades all work out in a day, know that if you manage your risk very well, you are growing up by 8% instantly. The next day, you just need to have a correct London and you're good. FTMO challenge passed, everything making sense.
The minimum take profit is 1:2, means there's no reason which you can get the 1:2.
Yeah.
Of which in such a
Like he said now,
scenario,
you can see a sniper entry.
Actually,
the stop loss is zero.
this is just the risk management pass for the worst case scenario. Before I've done this, I've backtested a lot of things. I've seen something to be able to say, if you can hear me say take 1:1 or take TP1 levels at GJ. You know that I actually understand when I say take TP1 levels at GJ, you understand?
Yeah.
So, okay. Now, the trade setup that we're trading, the strategy, or the backbone of the strategy. Follow trading setup, London anti-red London breakfast only.
Okay.
Follow trading setups, that's a London breakfast only after 8 a.m. So you should follow the London breakfast only after 8 a.m. Okay?
Yes.
That is, you know how to trade London breakfast, right? It's crazy. After 8 a.m. 8 a.m. you can start stepping in. Then New York 1 can be 1:30 or 2:30 volatility. Listen, what I call New York 1, you can trade the 1:30. That's when the new session opens. And if you look at NASDAQ, since we're trading just NASDAQ, if there's any fundamental like NFP, they all hit the market at 1:30. And they always cause drastic moves to the market. Yeah. But at 2:30 also, we'll have where algorithms kick in, where the stock market itself opens. And there's still very high volatility. So if you are to trade New York 1, you are trading either around 1:30, between 1:30 and 2:30 candle. You understand? And New York 1, you reach just 1%. It's a very volatile market around New York 1. But every New York 2 must be after 2:30. So from backtesting, we'll backtest and we'll see when New York 2 actually started from time. So you've seen, right? So these are the criteria. So when I say New York 2, you are looking for trades after 2:30, like after that volatile period, you are looking for trades. New York 1 is around the volatile period. London, we have the London. So today we'll be backtesting the London breakfast for the GBPJPY. We'll backtest the New York 1, New York 2, and then we'll backtest the London breakfast for NASDAQ. You understand?
Yeah.
Okay, so we'll go to the charts.
London breakfast is GG.
GBP, any GBP pair. It works on all GBP pairs actually. and almost all euro pairs, but I like using GBP pairs for the start. So my charts were already marked up with a couple of analyses, but I'll need to kind of clear them out. You can see this is GBPJPY. So like you can look at the back testing of the trades. You can see the trade setups, right?
Yeah.
That are back tested. But I'll need to clear them. I need to go back. We need to back test 10 days. We back test 10 days from a previous month. Making sense, right?
Yes.
So what we are doing is we are only looking for one thing: London breakfast. The London breakfast is we are looking for a break of structure, be it a break of our money line theory,
Yeah.
or a break of a minor support or minor resistance. Any break of structure that you can support as from 8 o'clock London time, like our 8 o'clock here, as from 8 o'clock, or even with 1 second after 8. Any break of structure that is support 1 second after 8 a.m. is valid to be a London breakfast. You understand?
Yes.
So we'll be using a help of an indicator. I'll put this indicator that tweaks here, the 3 moving averages that I did tweak. Now, these 3 moving averages, you see when all of them are going up, it shows our going up. When all of them are coming down, you see, it shows our going down. You understand, right? Then I'll input what we call killer zones. Now, killer zones tells us different trading sessions. For example, this red section is where the Tokyo started. Sydney started like here. And if you look at this time, this is 22. 22 o'clock is 10, right? Yeah, where Sydney started. Tokyo is this red line, started at 12, like 00, right? Tokyo started at 00 and run to this area. While London is this green line, which started at, if you see the green line is exactly 800. Like, look at the time down there. It's exactly 800. And it ran up to this level here. Then New York started here at exactly that's 1 o'clock, showing you 1 o'clock, but another New York is actually 1:30. We're showing you 1 o'clock, 1:00, that's 13 o'clock. Then it goes back. New York ends here, where Tokyo starts. You understand? Where Sydney starts, continues. Tokyo starts from here. This over the weekend. Where you don't see a line on Tokyo, no, that's over the weekend. I see a line like this, know that it was not a weekend. You understand? So that is what we have. Now I'll not go too far. So I'll be on a 15-minute chart on GBPJPY. 15-minute chart. Now what we'll do is I will go back in time. We'll back test 10 days. Yeah. During a particular month, like they were July. Let's take June, sorry. Let's just take any time in this June, right? Like from let's start from the 1st of June. Let's back test just 10 days. You see where the price actually starts. Okay, so what we're basically doing is we're looking for a break of structure where this London is. You understand? Do not take a break of structure before the London. It may work, but it doesn't guarantee profitability. For example, this is a green London line, right? I know that we have been very smart enough to draw this. So London is coming at 7:30. We'll spot a break of structure, break of resistance. We'll jump into the price, it will go up like that and give us profit. Yes, it's great, but it's not really our setup. Okay, we want this candle to start, right? Yeah, this is the black candle, this black 15-minute candle here, which started the London session. This black one. I'm doing for a 15 minutes, but on the 5 minutes we'll get better entries. Okay. Now, anywhere in this London session, we'll be looking for a break of structure. You understand? Yeah. Now the thing is, most trades that we spot give us an average of 20 pip TP as well as 20 pip SL. So calculating from here, let's see. this breakout candle alone gave us 30, like this breakout candle alone, right?
Yeah.
Gave us 20 pips, 20 something pips, 26 actually. You understand?
Yeah.
Yeah. So during the London here, I don't know, this London was not the best. In case you bought, I don't know, whether you bought or sold. Yeah,
if I entered late,
you would
I
have
would have
entered
sold.
here to buy. Remember, this is a break. You want to
Okay,
trade
yeah.
under the London candle. You would have bought around here, would have made like 20 pips. Okay.
Mhm.
But let's not, okay, let's count this one as we reach 2% and it was a loss 2%.
Mm.
But that was not a break of structure, right?
We considering that, we assume that it was going to go up, then
This was not a break of structure.
okay.
Yeah, this wasn't because the break had already happened.
That
Before
already
the
happened
London.
before London.
Okay.
We're looking for a break of structure
No,
after the
yes.
London.
That this thing is that red candle.
Yeah,
That red candle, please point at that first red candle.
this one,
Yeah, the first one.
this one.
Yeah.
Yeah.
That's 8:15. So that red candle is the candle that
Actually, there was if on a 5 minute there's a break of structure, you have to take a sell and come down here. You
I see
understand?
now. Yeah. So that red candle technically was in the London. That's when the London session started.
So there was a break of structure, but it was not a break of structure. Let's say we now have a trade for this London, right?
Yeah.
Let's come here. We're looking for a break of structure after the London session. Okay.
Yes.
So coming from here, let's start from here and back test and go and see. So all we're looking for here is just price to break structure during London. So you have these highs which got broken here. You see the London break.
Yeah.
During the London, this candle just went up, and you want to be entering at the break of this candle. So you enter that candle, you'll be entering a buy trade here. So this is like the second. Let's just say this first was a losing trade, right?
Yeah, that was a losing trade.
If in case it's not TP at 30 pips, so
Yes.
got 30 pips. Remember, it's 1:1.
1:1.
1.
Mm-hmm.
Let's see 1:1. Take profit was hit 1:1 was a winning trade. Was a winning trade or not a losing trade? Right, maybe.
That's winning.
It's a winning trade. Wait, look at the wick of this red candle. That was a winning trade.
That was
For
a
the
winning
London.
trade.
Huh? This trade finally moved like a 1:1.5.
Yeah. Yes. The
Right?
thing is the criteria that we use for our stop loss too.
Below structure.
It's from the it's on the stop loss that we.
That you will know whether it was a winning trade or
Yes.
losing trade.
Yes.
So based on risking 1%, putting stop loss correctly, risking 1%, putting 1:1, it just hit 1:1 straight.
Mhm.
It's not losing. So there was a London breakfast, positive. Right now,
Positive one,
so
yes.
what you do is you just write for the London here, right? So just write plus 1%, just like that. Plus
So
1.
that I'll be indicating
The risk. We know very well that we're risking 2%.
1:1.
So
yes.
when you just write plus 1%, when we calculate, we'll just times everything by 2.
Mhm.
But let's just make it easy. So plus 1% for the London, which was great, right?
Wait, since we are doing just the London, let me just do plus 2%. Since it's strictly the London, and you can't need to multiply again later.
You just have some losses. Anyhow, put plus.
When it's loss is minus 2%.
Okay. Anyone that anyway you want to do it now. We are putting plus
Either
1,
way,
then
once we
we
understand what
multiply it.
Yeah.
So there was the first trade. We're backtesting just 10 days. Okay. London breakfast. Stepped into the London to the green candle. Pop. It made sense, right?
Yeah.
We'll come the second time. The second day, we don't trade again. We're up by 2%.
Yeah.
We'll come the second day. This is a break of the candle. This candle started breaking around here. We enter that break. You're taking a buy. Stop losses below structure. Take profit. 1:1, 1:2. Like I always put a TP1 inside this.
Yeah,
This
because
highs
after
here, right?
TP1 is to the move entry to.
Now, if you hit
1:2.
TP1, no, don't even see it again in the price.
Okay.
So no matter what you did, even if you took this level as a TP1, right?
Yeah.
Price finally hit that level. But just imagine you had a 1:2. So this trade grew you by
By 4%.
4%. Just add plus 2%. Now you may be.
That's in
Okay.
the case that the first one was plus 1.
Okay, so put plus 1%. Well, put plus 2%. Okay.
If the first one was plus 1% now,
Plus 1.
yeah.
Put plus 2%, right?
Yeah.
Okay. 2 Londons, perfect.
Perfect.
Okay.
Yes.
Yeah, anywhere around here, we're stepping now. Right? This 30 pips. So this is
And the
not,
thing is, this price never from the day we enter this trade, it has not hit what it
so this is
or
not here
SL.
stop loss. So if your stop loss was correctly placed, even if you allow the trade now,
Yes.
you cannot lose it if you did follow the London break.
Yes.
Yeah, and pull stop loss well. If your stop loss was this tight, right? This clearly a 15 pip stop loss. Trust me. Now, how do we risk? Let me look at the risk first. Let me show you how I risk. For example, I'll come to this trade. Stop loss is 25 pips. What I do is, let me show you what I do very quickly. If I come, I have a $100,000 account. Okay, I'll be like 25 pips. I want to risk 2%. 2% of my account is $2,000, right? I want to risk it in 25 pips. I take divided by 25. Divided by 25. I have to use an $80 lot. Excuse me, $80 lot is what's the lot size?
0.8.
Divided by 10 is 8.
8 lot instance, $1 be
Lot size of 8.
The lot size of 8, right? $1 is how many pips?
Wait, how much are we talking about? 200K.
A 100K account.
Oh.
Okay, lot size of 8. $1 is how many pips?
$1. $1 is one
1 pip. Sorry, 1 pip is how many dollars?
is $80.
$80 times 25 pips. It's $2,000. You understand? So your stop loss is there. Your entry is that level. Yeah? You put your stop loss there and you use this lot size. You are very sure of hitting that $2,000. Negative. You may just hit it and pay spread too much. Like if you over, it goes above the spread that you paid. But we also do consider spread. So sometimes you may just add that, subtract that 1 pip or add that 1 pip, depending on you. Consider spread any way you want. It depends on you. But yeah, so you already understand. You understand how risk now. We'll come here now. Stop loss is 15 pips. What is our? But to reach $2,000 and 15 pips. So quickly just write 2,000 divided by 50. We have to use a $130.
No, I have to divide by 10.
15. Look, I take $2,000, which is my 2% risk, divided by 15 pips, it's $133 lot that I have to use. Don't mind the lot size. Okay. I divided by 10 to get a particular lot size is 13.3. So I can use 5.0, then 3.3 lot size. That's how I line out to this. That's why you see me using that 0.5. I don't think that I like using 0.5. I just like to, sometimes you may enter this one, try to move 1 pip below, you enter again. So those extra 1 pips, I just get them just like that.
Okay.
You understand?
Yes.
So you have a lot size of 13.3 that you can use in this trade. Now, if you hit your stop loss, you are losing exactly $2,000, 1%, nothing more. You grow by 2%, right? Okay, let's come now to the next day during the London. The London came. Okay, the London came. You just spotted a series of highs. Okay. These highs. You are only wanting to catch the break of these highs. Exit at TP1, 1:1, 1:2, risk to reward ratio. You step up. Okay. During the London, price never look at your moving average. I tell you to go up, right? You must know normal price action. During the London, price never really broke out of any structure here, because if you were to take structures, for example, let me make it in a way that you should understand. If you were to take 2 structures, right, we have taken this structure like this during the London. Before the London, right? During the London, price never broke down here for you to sell, and you waited. Price was still here, so I'm waiting for the break from this green place and above. Any break you see, take it. Will work. So from here going, you saw a break here, which you entered a buy trade. You entered a buy here. Now, stop loss. Our last stop loss, what was it? 15 pips. Second to the last, 25. So let's know that our average stop loss is 20 pips, right? 20 pips stop loss anywhere around here. Anywhere that you put a stop loss like here, 20 pips stop loss is cool. Never put 10 pips. If you put 15 pips, you should be a lowest. Always give your trades breathing space by 20 pips stop loss. That's a rule you should just put in your mind. 15 pips, 20 pips stop loss is good. Okay? If in case your stop loss was 15 pips and above, price will not even stop you out, as well as you got a 1:2 risk to reward ratio. If you put your if you entered right and you decided to tighten your stop loss and get your 1:1 trade, okay, tighten your stop loss here to 1:1. I've literally put a 10 pip stop loss and you hit TP just like that. Boom. At 10 pip stop loss now, you'll be risking a lot of money in 10 pips. You understand? You hit TP. So anyway you are chosen to put your stop loss, if you put it correctly, below structure. Remember below structure, right? Put it below the structure that you see. You would have put a 20 pip stop loss, something like that. And we hit a 1:3, right? No, let's just take it 1.5 actually. Yep, this candle ended around 1.5%. So it will be at plus 1.5. We'll come the next time, the next day, right?
Yeah.
London again, London breakfast, London breakfast. You spot this high here, just pull it up. You will not sell, will you?
No.
Nobody will sell. Even if you had to sell, there was no break of structure here. I'm just saying because some traders are crazy. After this time, you're waiting for a break of structure. And you've got your break of structure. Stop losses, you can put it below the moving average. You can put it here. It should just be around 20 pips, anywhere around there. And even if it was your 1:2 was hit straight up, we'll put a TP1 which was this high. Me, I'll exit like here. But when I see this price moving fast now, I'll hold it. But let's say exit at 1:2, right? So it will be right 1.2 plus 1.2%. 1.2% will come the next day. During the London, we are there waiting to see what price is going to do. So during London, we had structure like this kind of came up here. So what I always do is there's this low time frame structure, but you go to a 5 minute, you see it very clearly. You understand?
Yes.
You would have had the break of structure here just directly after the London, because normally you will not sell because price will not give you anything to sell here. Moving averages were also going up. You said the moving average just helped me. It gives me that unconscious price bias without me really thinking.
Yes.
I just have it unconsciously. So I am still entering a buy. Yeah, enter a buy anywhere there. Stop losses below here, right? You can put it below here. Another price going below those moving averages, hitting a stop loss. Even if it was TP1 is 1:1.3. Yeah. Obviously exit at 1:1.3 before this pullback now.
Yeah. That high.
Here, right here.
No, this high. Yes.
That's fine.
1:1.2.
Yes.
Yeah. So
1.2.
so plus 1.2%. Yeah, that's a 4. You'll be there how many days?
5 weeks. 1, 2, 3, 4.
Okay. We're taking the next day, the next time. So you are coming towards the London, you just see price forming highs. Okay, you are waiting for price to break it. You saw it broke this high just like 5 minutes to the London, retested, gave you this entry. No matter what, you will still know. So when I see this now and I see this high here, I'll just carry my this thing up like this. And what I'll do is I want to trade only a break of structure, so I'll take it up here again. Okay, since I've broken the structure, right? There are two things: break this structure and come down. I'll see it in this range, in this tight range here. Let me drop the range exactly the way I do, because I know how to spot this break of structure as well. Because of experience, I'll be like, okay, this is a range I've seen, right? I would have bought, but even in case I don't want to buy, I'll still hold this range. Price need to break it, and we'll have a break of structure to the upside. Although it was very late, and on a 5 minutes, we had a trend line here, but we'll still be buying.
Our money line.
Or the money line inside there, but we'll still be buying. This is a 15 minute. We'll still be buying. So it was right around 10, 11 even. But if you were smart enough, right, like me, I'd have entered the buy here. Not just a bad day, You understand?
When the
But
price are slow,
if in case you bought price by no means reach your stop loss, which could be like here, no, it's too far.
the previous low.
Remember, I just put it below this place. You understand? Because if price breaks this low, it's going to hit it. So I don't want it to hit it right down. You just hit it. Just hit it immediately, you break the just hit it immediately, you break the low, which never got broken. Even if you bought well, your low never got broken. If you bought now, low never got broken. TP finally hit 1:3, but let's put a 1:2, which was here. Like here. So we go a plus 2%. Now you be plus 2%.
So the things we are doing,
Yeah.
raising 2%.
We came the next day, I spotted this contraction here. You go to 5 minutes, you see it's very nice. Understand? Spotted something like this. Something like that, right?
Yeah.
Break to the downside, straight candle. This day was not stressful. You see that some days are stressful, some days are not stressful at all. All you need to do is spot a structural break, stop losses there. We're targeting our TP1. TP1 level is around here. TP1 level is right around here.
Yes. Previous low.
Yeah, the targeting my 1:1. But when I see this kind of momentum, trust me, I'm going down. Exit like some. Let me just be realistic. Exit like here, which is a sharp 1:1. So plus 1% again in the B. Let's go down to the next day. You had price moving in a direction, give a break of structure. On a 5 minute, you see a very clear break of structure here. That's why we use now the 5 minute check. You understand?
I think in these places they had, can we go down to
1 minute?
To 5. And if it's
It's just when I go to 5 minutes,
you go back to the
then it will be too far. But at least when you're a good trader, so you just know it was a clear break of structure in 5 minutes. To the downside, right? Yeah. And by the way, you will not buy even if you wanted to buy, you need your money line to buy. So there was no buy, just to sell. In GJ, you target at 1:1. Stop losses right there. Take profit at TP1. If you don't spot a TP1, which was here, TP1 was spotted. Around here was like a 1:1, right? You got your straight 1:1. If in case you allow the trade to 1:2, you still hit TP. Anyway, you did not hit SL, right? So let's just take TP1 plus 1.2%, maybe this one was 1.2%. Because these were 8 actually. On a 5 minute average, you see a whole move to the downside and contraction like this. For almost 30 minutes, moving like this. There's a whole place to exit. So plus 1.2%. We'll come now to the next day. This day was just a very good day for us, Spotted a very sweet contraction, just waiting for price to break, and price finally broke to the downside. After the London, right? It broke to the downside. It was not a break here. It broke to the downside. Look for only structural breaks that I can identify. So stop losses right there. Okay, this type of thing, I even tight my stop loss somewhere like here now. Stop losses like that. Take profits are crazy. This one is a clear 1:2 that I would have taken. I would have come at 2% because I don't have any TP1 clear. So I take my 1:2. Always 1:3. Yeah, but we'll take 1:2 if I exit at the pullback of this candle here like this thing. And this kind of does is I exit, you just stay 1:2. Anyway.
So you said after 2 candlesticks to come out? Well, no, it's not like it's standard. I'm just saying after.
Yeah, I know that based on the principles you said, was strictly doing 1:1 based on
yeah, I'm saying.
I
was saying that 1:1 to 1:2 because I know very well that many trade opportunities are 1:2. But at the worst case scenario is 1:1.
I said 1:1 for DG and then minimum 1:2 for 100.
No, I said, look here, I said, I'm not sure you again. me show you again. Take 1:1 to 1:2. Two levels at TP1 for GJ.
Okay.
You understand? So you could take a 1:2 for GJ. If that 1:2 is a TP1, you take it. And when you don't have really a clear TP1, it's just wise now. This is where trade management comes in. You just use your common sense to know that it was a jackpot for you to hit. When you pass your profit target, lock in profit and see you. You understand? Yeah. Or just move when you reach your profit target. Move to break even.
Which is the previous low.
You can move to break even with your previous low. Remember, there's also a rule here. Remember, I have a scenario for everything. It says under trade management, move to break even at lower structure, at smaller structure. So the moment price just retest a bit for you on GJ, right? You move to break even somehow. So no matter what, you have gotten a good trade. Now coming during this other day, you wanted to trade here. You spotted your support level here, right? And you have clear break of structure. After 8, it did not break before 8, broke after 8. On the 5 minutes, these entries are way better. You understand? So your entry is clearly here, as long as a break of structure. There's no break of structure. You don't trade what is not a break of structure because it will not work.
And it's not yet 8 is now this one.
This one is 8.
I mean, even though it went up now, but it's not
even it's not break any place, by the way. And you wanted to break a money line somewhere, it did not break any time. And TP1 was here, which was like a 1:1:1.6. So you put 1.5 plus 1.5%. And then we'll come the next day. GJ is coming again. We're coming to see the pattern, the setup.
Why did you hit 10 days?
Well, I've hit 10 days. Let's just do this last one. 11 day, right? We hit a setup there. Clear break of structure. One of our best money line. See money lines, we just get so excited, Because another money lines will give us a lot of money. So your entries are there. Stop loss is here. And take profit at TP1. This one, no, I don't have mercy. TP1 was hit at 1:1.7. So you need to add 1.7%. Okay. So let's calculate with the calculator. How many percent increase did we make? Trading this just one pair, okay? In 10 days.
1 plus 2.
Okay, let me calculate 1 plus 2 plus 1.5
plus 1.2
plus 1.5 plus 1.2 plus 2 plus 2
1.2 for them
plus 1.2
plus 2
plus 2. I put 1.22 times plus 2. Provide again below.
plus 1
Okay. Plus 1
plus 1.2
plus 1.2
plus 2
plus 2
plus 1.5
plus 1.5.
that's 10.
So
Let's just transact that thing.
11 or 10.
10. Let's take
Let's
the 10
clean
days,
the
okay? This is 14.6% increase, okay?
Times 2.
14.6 times 2.
Even though that 14.6 was already enough to complete the challenge.
Yeah, this is 29% increase. Okay. This is in 10 trading days. 10 trading days alone. Trading
accuracy so far was 100%.
100%. Like, just imagine that you fumble during some days. It's possible to get fake outs. Although we've not really gotten that fake out that is really clear fake out. So you see, we'll grow by this 30%. 30% of $100,000 account is $30,000. 30% of even a $10,000 account is $3,000. 30% of a $200,000 account is $60,000 in 10 days, 10 trading days. That's literally half a month. You made $60,000 of a $200,000 account. Okay, look, $60,000. Right?
Let's convert it to silver.
I'll first take times 0.8, my 80% first. Times 650. 31 million pounds made in 10 days trading one currency pair.
With the dream account. Okay, let's go to 10,000. What do I have?
You want a $10,000 account, right?
Yeah, that's
$200.
We've made
no, that's $3,000
$3,000.
and 0.8.
8 times 650.
1.5
1.5 million pounds.
In 2 weeks is not small.
Yeah, 2 weeks of trading with one pair
One currency pair.
at a particular time. So just come right.
And there's still this thing, there's still US 30.
I wish I
US
had
one,
time
sorry.
to go to 2 schools.
You see,
Because what happens is I just wake up at let's say wake up at in the morning, then at 7 you start monitoring by 8 o'clock now.
You get up, you start
They
monitoring
traded.
at 7:45.
you understand?
Yeah,
So
but
you
that's
start
our new
monitoring our
routine,
time.
man.
Huh?
You start monitoring our
I
time.
just